me at stanbicibtc.com. So if you want to reach out, if you have any questions about any of the items that you've heard, advice on markets or financial and so forth, call me at stanbicibtc.com. And again, Fola Abimbola, of course, is a senior frontier analyst with Stanbic IBTC. Fola, you're welcome again. I guess the markets, Fola, how, we're coming to the end of the year. It's October 21st. How would you describe the exchange? Yeah, I guess year to date. How would you characterize it?
Right. So if you want to break down the performance of the exchange, what you would see is that there has been a mix of performances. The NSE is up 3% year to date, and this is largely driven by a 64% appreciation in the oil and gas sector. So specifically, we are seeing names like Seplat and Total up more than 50% year to date. And I guess you could link that to probably rising oil prices, which is solid for their top lines. In terms of the other stocks, we've seen one-off rallies from the smaller stocks like Honeywell and probably a banking stock like First Bank. But if you look at in terms of year to date, the NSE is still up 3%, and that's because this strong performance that we've seen in the last quarter has been offset by a very weak Q1. The NSE gained 66% in Q3 alone, which suggests that the market performance hasn't been too solid or too strong in the prior quarters. There are lots of challenges that the companies are going through, and we are seeing that filter through to their stock prices.
Great stuff. So, and I think so far, as far as domestic investors versus foreign, it looks like it's still this year has largely been driven by domestic investors as far as volume and activity on the market. Is that right?
Yes, it is. What we could see is that retail investors and domestic fund managers are actually dominating the market. But from the PFAs, what we are seeing is that the inch up in interest rates are acting as a disincentive for investments in stocks, because the PFAs are more risk averse and would probably like to take more positions in the bond market. So what's happening is that the market is dominated by domestic investors. However, the PFAs, the excitement we used to see from the PFAs from last year appears to have diminished just because of that inch up in domestic bond yields.
And as far as the foreign investors are concerned, are we still looking at FX liquidity concerns with respect to why they have been largely on the sidelines?
Yes, I mean that's the major concern. And what you would, if you talk to them, what you would gather from them is that Nigeria is an important market for anyone to ignore when you think of sub-Saharan Africa as a whole. The market is relatively liquid compared to other smaller markets. However, that FX liquidity and concerns that if they come back, they'll be able to get their capital flows back. So, if there was some sort of certainty in the market, it's easy for the foreign investors to dimension their risk and see, okay, there is a lot of liquidity in the market, or there's liquidity in the market. There is price discovery in the market. We can dimension our risk. We can know at what exchange rate we can exit. It's easy to kind of buy some sort of derivative to hedge against any exchange rate risk. If all those things were there, and if there was like a floating market and more trust on the regulators, then we would see them wanting to come back. But for now, I think a lot of them are sitting on the sidelines, and the ones that are here are still trying to take their capital out.
Interesting stuff. So, if we're to ask you for any stocks that you folks like, would you stick to the stocks that have performed very well in oil and gas, or are there any ones outside? I mean, I guess, pretty much what have you liked so far this year or as we go into Q4?
Right. Our top picks are actually broad-based across different sectors. So in terms of the banks, our top picks are GT, Zenith, and UBA, just because we find their valuations attractive and because of their solid fundamentals. And then in terms of the palm oil names, we still like Presco and Okomu. We believe that the pricing environment is they have a lot of pricing power and can continue to increase prices to compensate for the rising inflationary environment. The same thing applies with Dangote. So for the non-banks, our top picks are Presco, Okomu, and Danksem. And if I could just talk briefly on the brewery space, we kind of did a report on the beer manufacturing space a few weeks ago, and our top pick there was Guinness. We like the direction Guinness is taking in terms of the beer space. We like the fact that it is leaving the lager segment, which is a very, very tough segment in the beer market, and it is making investments in higher margin categories like spirits and other non-beer categories. So those are our topics.
Great stuff. And of course, for those listening, just remember, always consult an advisor like Stanbic IBTC. You want further information on stocks and so on and so forth. Again, call me at stanbicibtc.com. You can send an email there. Call me at stanbicibtc.com. We're going to delve a little further into breweries. I mean, do they usually have a good quarter going into the festive season as far as the breweries are concerned?
Yes, they do. So they're going to be a number of drivers. The first one is we are going to see Q3 numbers not too good when you compare them on a quarter-on-quarter basis. That's because historically Q3 is not really a good quarter for the breweries, largely because of distribution challenges. We have rainy seasons, we have other challenges. But then as we go into Q4, the festive season would actually beef up their top lines, their revenues. And then the other driver that we see going beyond the near term is some support from election spending. So as more campaign spendings come to the center, as campaigns take center stage, we would see more money flowing into the system and more demand for beer. So the major driver for 2022 or a key driver for 2022 would be election-related spending for the brewery space.
Oh, interesting. That makes sense. That does make sense. What about the challenges that the brewery sector has faced, like excise duties and so on? Do those headwinds still exist?
Right, those headwinds still exist. Interestingly, we compared excise rates of the brewery space with in Nigeria with the environment in East Africa, and we found out that Nigeria's excise is actually one of the lowest in the world. However, that does not mean that any increase in excise will not affect the brewers, because the last excise increases actually impacted their top and bottom lines. So we see that as a risk. However, it's difficult to tell whether there will be an increase in excise in the next fiscal year. We've had the we've had the authorities come out to say that they would increase excise on carbonated soft drinks. That would impact the malt business of the brewers. But then, if you then take things into perspective, the malt category accounts for a smaller portion of their revenues compared to lager and beer. So even if there is an increase, the impact wouldn't be as much as it was for beer. But then we still see it as a risk. We still see other headwinds like the low consumer purchasing power and the
inflation,
forex environment.
Okay. Besides Guinness, do you have any other picks that you like in breweries?
Actually, Guinness is our major top pick, is our preferred pick. We have a hold on Nigerian breweries. That's simply because its valuations are not as attractive and the market has priced in the positives for the company. And then we have a sell on international breweries.
Interesting. Thank you. Thank you so much. Again, we're talking to Fola Abimbola, Senior Frontier Analyst with Stanbic IBTC. And you folks, if you want to reach out, call me at stanbicibtc.com is the email that you want to send. Val, you want to go ahead?
Yes, Oanachuko says he has a question. So what impact is the rising crude oil prices on the shares of oil companies listed in NSC?
Right, the impact is mixed. So for the oil names like Seplat, I mean, that would be a positive impact. But then what we are seeing is that the rise in oil prices has not translated to a concrete improvement in the real sector. So what's happening is that we are seeing oil prices going up, but we are not seeing that translate to an increase in fiscal revenues. And that's because other challenges, there are other structural challenges. We have the subsidies taking out a lot of the windfalls from the oil price increases. And then, you know, we have production constraints. We have vandalisms in the south where oil is being produced. And then, you know, we also have the OPEC agreement that is limiting oil production. So all those things are putting a cap on the tailwinds that we could be getting from the increase in oil prices. Right now, we have not seen that translate to any increase or any improvement in the real sector. We've seen maybe some sort of marginal improvement in FX reserves, but then there are still currency headwinds. People can't still get enough dollars that they want. So the manufacturing sector is still suffering.
Thank you for that. How about NGX? That's a question from Wale.
Right. How about NGX?
Yeah, I think it was recently listed on the, is that something you guys are looking at? I think the NGX was recently listed.
Yes. Yes, I just want to call on the question. Yeah, I mean, the NGX was recently listed and it will take some time to see how things play out in that space.
All right.
Great stuff.
From Prince, final message for this morning says the perspective on Guinness actually makes sense. I never look at it from that angle. And again, why is it that beer manufacturers seem not to increase their retail prices for a very long time now?
Yeah, so it was majorly due to the competitive headwinds. So we had the likes of international breweries coming to the market following the acquisition of AB InBev, and their major target was an increase in market share. So they wanted to take a lot of market share from the leader Nigerian breweries. And because of that, they did not increase prices. But this year, because of a lot of pressure from the minority shareholders and other external pressures, they've started to increase prices. And we've seen them increase prices more than 5 times this year. In fact, this month, they increased prices twice. And the price increases have been very assertive. So that pricing environment is actually one of the upside catalyst that we see for the industry.
Is that due to the cost of manufacturing?
Yes, so the manufacturing costs continue to go up and they've not been able to, or they couldn't offset that in the last few years because of competition. But now they can increase prices to kind of compensate for that higher inflationary environment.
Awesome.
Solid
Fola
stuff.
Abimbola, well done.
Fola Abimbola, Senior Frontier Analyst, Stanbic IBTC. Great stuff. And again, anyone who has further inquiries, do send an email to callme@stanbicibtc.com. Fola, thank you so much. And Val, thanks for all the messages.